You're listening to Ask the Expert on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. This is your Ask the Expert segment for April of 2017. I'm your host, Craig Hemke, and joining us this month is Eric Sprott himself. Talk about bringing in the expert of experts. Eric, thank you so much for spending some time with me today.
Hey, Greg, happy to be here. I always look forward to these things, and hopefully you have some challenging questions, and we'll see what we can do with them.
Should be a lot of fun, my friend. Of course, before we get started, just want to remind everybody once again that these Ask the Expert segments are brought to you by the Sprott Money Precious Metal Storage Program. We have 5 international storage vaults and the most competitive prices in the industry, so please visit our international storage page at SprottMoney.com to learn more. Eric, you're a very popular guest. I think we had more questions submitted this month than we've ever had. In the name of time and managing your time and everybody else's time, I've tried to condense all the questions into 7, kind of lump them all together, get little pieces of maybe everybody's question and combine them. So I've got 7 questions for you. If you're ready, I will hit you with question number 1. Eric, I know you're concerned about the state of pension systems all around the world. This question deals specifically with the state of the Canadian pension system. What do you see in Canada? And then specifically, do you ever see where pension plans in Canada ever allocate any money at all to the precious metals?
Okay. Well, first of all, in Canada, we are more funded than, for example, the U.S. pension fund. And one of the reasons I focus on U.S. data is U.S. data kind of drives the world, or the free world, or the financial world, if you want. So I'm not really a student of the Canadian system, but I know a couple of things that are different about the Canadian system versus the U.S. system. One, we have a fund with money in it. We have people who run the Canada Pension Plan, and it's a rather large plan. 2, a number of years going into, say, 3 or 4, the government changed the date for retirement for people below a certain age. I think it might have been 35 at the time, from 65 years of age to 67 years of age, in recognition of the likely underfunding of the pension plan. And I suspect as time goes on here, that for young people, you may find that age creeps to 68, 69, 70, something like that, because of the underfunding. But in terms of people who are close to retirement today, I would expect that the fund will see you through till the end, because we do have a fairly good funding. I can't tell you what the percentage is of funding because I don't follow it specifically like I look at the U.S. because it's just a disaster waiting to happen. So I think you can take a little comfort, but I would be absolutely certain it's underfunded, and I'd be absolutely certain that with interest rates of 2 and 3%, that they'll never meet their annual bogey, if you will. So it'll become more and more underfunded unless, of course, they increase the tax deductions to fund it. But they seem to have a little more prudent attitude towards how they're going to make it than we see in the U.S. system, where there's no prudency whatsoever because there's no fund. And it's just a matter of, well, someday the bell's going to ring and everyone will be told there's nothing there. So we're much better off in that sense.
And the second part of that question, do you know of any fund or funds in Canada that actually allocate any money at all to gold and silver?
Well, I think, yes. I don't know specifically whether the Canada Pension Plan invests in gold equities or gold. I wouldn't think they invest in gold. And I don't know the answer. I would imagine they do own some gold securities. One of the interesting things about institutional investors is after a point in time when particular groups come into favor, they're almost forced to buy the group, and even though they don't want to. So, for example, we've seen a very large run-up in gold stocks from beginning of 16 to today, so much so that the weighting of gold stocks is, I don't know what the weighting is. Well, no, I do kind of know. I think the weighting might be 6 or 7% of the TSX. So yes, as it goes higher, and let's say it becomes 10% of the TSX, well, I mean, you can't not invest in it. So pretty well everyone would be invested, whether, of course, on average, they wouldn't have 10%, because in Canada, and we have a funny conundrum in Canada that our gold stocks are owned internationally. And I call it kind of like the Nortel effect. When Nortel was owned internationally, and the Canadians had to own it as well, it ended up becoming 30% of our index because it just fed on itself. And I think the same could be true for Canadian gold stocks. That, if everybody in the world wants to own Canadian gold stocks, it's hard for the institutions. It's an impossibility that they could own that percentage because a lot of it's owned offshore. So you get into this chasing game where everyone, is always they're then afraid to sell the stocks because they're underrepresented, and they're forced to go into the market to if they want to increase their weighting. So it becomes a bit of a self-perpetuating, wonderful situation for everyone to be in if the gold stocks keep rising and the international institutions and retail are participating in it.
All right, moving on to the second question, and it somewhat follows along that same vein. It was, I think, last year, Eric, that the Canadian government announced that they had finally finished selling off all of their gold reserves, really almost at the price bottom. Because of that, do you feel there is any increased risk of gold confiscation in Canada?
Now, that's a very good question. It's a very good question. I don't, of course, other than the Sprott Fund and a few other people, there's probably not that many big owners of gold in Canada. I mean, you never can say the government wouldn't do something because governments just do, for the most part, always do the wrong thing. The power goes to their head. And I mean, the fact that they sold the gold off is pretty stupid. Incredibly stupid. So, yeah, they could do that. I'm sure that if the U.S. was to do it, they would try to rally other governments to do it. Of course, one of the reasons the U.S. might do it is I've always believed that a lot of the U.S. gold has been leased into the market and it's never to be returned, by the way. We just sold ours outright, as many other countries have done. If a government, like the U.S. government, decided to take back all the gold, I think the effect in the rest of the world would be, the price would go crazy. Because there are lots of people, in fact, the majority of people, I'm thinking about India and China and Russia, where I don't believe it would be confiscated because they have the majority of the gold now. But it could still happen. It's the biggest fear. And then in some small way, I think by having some gold equities, you're almost balancing off the threat of gold confiscation because it could happen. We see the demonetization situation in India, which seemed to make no sense whatsoever. I think it's actually going to make the Indians want to go to have gold rather than paper because they realize that the paper can be taken in a flash one night, overnight. It's worth nothing. Those lessons do survive. So I can't rule out the likelihood that the Canadian government would confiscate. You'd think with the amount of gold production and the reliance on the gold industry that it would be less likely than. I would imagine it didn't happen in the 30s when the U.S. confiscated it. So I don't give it a 50-50 probability that it would be confiscated, but I would never want to sit here and say, well, the government wouldn't be that stupid to confiscate it. So it's a toss-up in my mind.
All right. Let's turn to question number 3. And this one has to deal with the pricing scheme for precious metal. Paper markets have set the price for both gold and silver now for over 40 years. We all suspect this can't continue indefinitely. So in your opinion, what will cause these paper markets to finally break?
Well, of course, that's the $64 million question, and you and I have talked about this ad nauseum. And, of course, the one thing that has to happen is that the physical demand for either gold or silver, either one of them, suddenly breaks the market, where the COMEX has to say, okay, no mas, we got to have these contracts settled because there really is no inventory. And that's why even Craig and myself were forever looking at this. We look at the outstanding contracts. We look at the likely inventory. We realize, well, there's no way that the longs could possibly own it if they ask for it, because it's not there. So someday that will happen. And whether it's the Indians buying more gold, or the Russians buying more gold, or savers in various countries buying more gold. We've seen, for example, a lot of gold consumption in Europe recently because of the Brexit/Euro problems that are going on over there. I mean, I think someday we will see some break in the physical market where we realize that the COMEX and the LBMA are, in essence, Ponzi schemes, that everyone's just trading paper and keeping the price suppressed with paper to make their fiat currency look strong, or stronger, I suppose is the word. But someday it'll break, because the numbers just get bigger all the time. We have the open interest in silver, for example, is, I think, the biggest it's ever been. We're over 1.1 billion ounces now. There's no way they could deliver that. So someday it's going to break. And, I wish I could tell the questioners when that day was. In fact, you might even have some thoughts on that yourself. But we keep thinking that day is getting closer and closer. So we'll just leave it at that.
Well, if it's a physical metal issue, I think that bleeds right into question number 4, where this is one of those where I tried to combine a couple of different listener-submitted questions into one, so I'll let you just have at it. The question, part A, is, have we hit peak silver production yet? And then I guess part B is there any reason to hold coins that are strictly government or mint issued, like Maples or Eagles, or do you think it's just as valuable to hold other alternatives, just as like generic rounds and bars?
Okay, on the peak silver, we got to be getting very close. I mean, when I look around for new silver opportunities, or even existing silver opportunities, like, there are so few of them. It's incredible. And of course, the really good ones are always seemingly overvalued on a relative basis, because they're unique in the sense that they're predominantly a silver producer, which is hardly any around. And I don't hear of people finding new silver discoveries. I mean, I'd love to read about somebody who, had some wonderful new intersection of a new play in silver. I don't see that. So we can't be very far from peak silver. I don't even know, Craig, maybe you can help me, whether silver production was actually just down a little last year. I don't recall the data. I know it's probably either up or down 1% last year.
Right, flat.
I can't say that we've seen a rollover for certain, but I know it's got to be getting awful close to the peak, if you will. That you can't see where more production's coming from. So, and of course, demand's always going up. I mean, the demand for silver in some of these new applications, particularly solar and biomedical and things like that, is quite compelling. So the demand, I think, is continuing to rise. If the investment community ever decided they wanted to own silver, I mean, it would be over in a nanosecond. I mean, theoretically, there's 1 billion ounces of silver. Well, that's only $17 billion or $18 billion today. I mean, that's the drop in the bucket on a relative basis. Somebody could just do like the Hunt brothers did and just scoop it all up. Mm-hmm. So we got to be getting close. And some of the things that we see going on in markets, the chaos of pricing and the short selling and the open interest, suggest that we're getting closer. When it comes to coins, I do believe there's a value in having a stamp on a coin, whether it's a Maple Leaf or a U.S. Eagle. I own quite a number of coins. I probably own more silver than I own silver coins, but I probably own more gold coins than I own gold. And there's a certain fungibility of a coin that's stamped versus something that's not stamped. So I like the idea of owning coins. I think for someone who's concerned about Armageddon happening, that sort of thing, that the government's finally proved that they've been mishandling everything, it would be a good thing to have some gold coins, because they will be fungible, gold or silver coins, because they will be fungible. So I'm a bit of a coin fan.
Fair enough. All right, I've got 3 questions to go, Eric, and 2 of them deal specifically with the miners and the mining shares. The first one comes from a Sprott customer who's concerned about the stock market crashing, and if we get into a general stock market sell-off like we had in 2008, what would you expect from the mining shares in the months that follow, considering that they are equities after all?
Well, I think that financial Armageddon is the best thing that can happen for anything related to precious metals. And yes, in 2008, at first, the gold shares went down, but it wasn't long before people realized that's where you should have your money, and of course, they rallied out of that. I think we have enough history now with the NASDAQ crash in 2000, with the 07-08 crisis, to know that gold is the safe haven place to go. I'm a huge believer in owning equities. I really do believe that when people start to worry about the banking system falling apart, there's very few places to go. Very, very few. Agriculture, water, food processing, things like that, and of course gold and silver. So I think they would survive, and I think they would prosper by it. And we've kind of noted that as the market kind of looks like it's rolling over here a little, the interest in gold shares is picking up, notwithstanding, I think, elements in the market, just like in the gold market, you sort of see elements in the gold share market where you wonder, well, who would be selling this here now? It's almost like maybe the same forces that are at work trying to keep stocks up every now and then come in and try to make sure that gold equities stay down. Mm-hmm. But ultimately, I think the gold equities, of course, have been awesome. I always like to go back to 2000 when I think the UE index was 34, and I don't know what it is today. Is it like 200 or 90 or something like that?
205.
200. Okay, so it's up 600% in the 17 years since gold bottomed, and of course at one time it was up something like 1,700% off the low, and we have yet to get that back, and I think that we would get that back in a financial Armageddon type of sense. So I think they will ultimately be the one group that prospers. History has told us that. History showed us that after the NASDAQ crash, and showed us that after the 07-08 crash, it showed us that in the 29 crash. So I think they would survive.
The second question that has to deal with the miners has to do with some of the ETFs. A lot of folks just simply buy and hold, or they trade the ETFs because it's hard to have the expertise to do your due diligence on an individual share and when you can just buy a basket of shares. Now, there are a lot of changes pending to a couple of the popular ETFs. The GDXJ is going to go through a rebalancing, and it was just announced last week that the JNUG is going to stop issuing new shares entirely. The question is, how do you think those 2 changes will affect the shares in general, of the mining shares in general, in the short term?
Now, the ceasing by the Jung to issue new shares, at first it seemed a little disturbing to me. And of course, the reason they were ceasing is they couldn't buy on the other side to protect the interests of their clients because of the shortage of gold shares in the market. And the same thing with the GDXJ, where they end up being owners of like pushing 18-19% of some companies. Mm-hmm. For example, I think in the case of Kirkland Lake Gold, they might own something like 17 or 18%, and they weren't even an owner 6 months ago. So it's this sudden purchasing that they have to go through, and of course they don't want to go through 20, because then they have insider reporting liabilities. And possible takeover bids, and there's rules to prevent them from going through 20. That would be adverse to their unit holders. So I think what it really indicates is that the interest in mining is incredibly significant. And unfortunately, a lot of it's being manifested through the ETFs. But I think if the ETFs just say, well, we can't deal with it anymore, and for example, the GDXJ is going to rebalance, and I guess what they're really going to do, it's not going to be as J as it used to be. J stands for junior. They got to make the market caps bigger so that they can invest more money in it. So maybe it'll be the GDX mid-tier sort of thing, but it won't be junior anymore. I mean, they're going to be up to market caps, I think, of something like $3.5 billion. Well, there aren't many gold companies listed in Canada that they have $3.5 billion market cap. So, but I think going back, it indicates that there's a lot of interest in the gold area. I think people probably could get back to, well, maybe I got to make up my mind which company I'd like to get involved with, rather than just buy the ETF. And certainly the institution should be capable of that. I think, they're almost abrogating their responsibilities by buying an ETF instead of, putting pencil to paper and figure out which gold stock should be more valuable than another one. But they have the wherewithal to do that. I mean, the average individual doesn't, but, the average individual can, it's like people listening to this call. They can pick up little tidbits of information that might help direct them in certain places. And there's some people who are like yourself, who are making comments every day about what's going on in the market. And if it's going to be a big part of your retirement, well, you got to dedicate some time to it. So I think it's possible to do that. I mean, some investors are better than others, but I think somebody who would spend the time to listen to this type of phone call could also spend the time to look at news releases and study companies and compare one to the other.
Yep. All right, Eric, one last question, and I guess this is kind of on a personal level to some extent, but this has to do with the success that you've had in your career. And the question is, what are 2 or maybe 3 business principles that have driven your success and that a regular investor could emulate?
I think the one thing that I would say to people is, as an investor, I sort of jokingly describe myself as I'm in the business of stealing value. And what I mean by that is you have to become a bit of a student of what is undervalued and what is not undervalued. And you have to go and find something that, based on other norms, looks very inexpensive. And it's a thing that's doable. It's like reading drilling results and sort of having a barometer in your mind. Okay, well, how big should a hole be that I should care about it? And there's a sort of a number called 40. Something should be 40 gram meters to get my attention. I.e., it should either be 1 gram that's at least 40 meters long, or it should be 40 grams that is at least 1 meter wide. And you have to learn these little things to see, well, is this really a good news release, and how good is it relevant to something else? What are the earnings like of this company versus that company? What's the exploration success of this company versus that company? What's the success of management that's now running this company versus their previous history? And I think if you end up doing the work, you can easily succeed because the market is very imperfect. There's always things that you can find of value based on known metrics. And then, of course, you have to have the risk tolerance and the nerve to exercise that judgment. You think something's cheap, okay, let's go and buy that thing, and not be scared away from it. If you've done your work and you think it's cheap, and of course you'll live and learn whether you figured out whether something's cheap by your own success, right? Because if you make a mistake the first couple of times, you'll correct those mistakes in time. So I think that there's lots of opportunity. You have to be sort of out for a hunt every day. So, for example, I try to read all the news releases of the gold companies and precious metal companies that at the surface look interesting. And I just say, make sure I don't miss something, because it's not that difficult to really see whether, and a lot of these releases, of course, are exploration results, because that's, the next generation, if you will. And you learn to read those things, and I'm not a geologist, and my head goes fuzzy when I read the descriptions of some of the geologic properties of things, but you can always pick up the phone to the IR guy or the CEO or the CFO and ask questions. Just tell me in layman's language what this all means, and normally you can get a reasonable answer. And having done it lots of times, you get to figure out the difference between a guy who's, selling the story and a guy who maybe really has the goods. And you want to pick around and look at names that other people aren't looking at. Like I've never, ever, hardly ever bought a big cap gold stock or big cap any stock. They're just too well followed. You're not going to steal anything by looking at them. You have to look at small things that become big things. And I remember when I owned Goldcorp, when it was a 500 million market cap, and then I don't know what it got to, but it got to 20 billion. But it was cheap at one time in life, and people didn't like it at one time back in 2000. They didn't like the company. And that's an important ingredient, that people don't like it. Nobody follows it. These are little check marks. People dislike management, check. Dated history, check. Because that's where you're going to find your undervalued thing, where some guy's really turning something around, but the market hasn't bought in yet. And those things are available. And the more it's undercovered, and almost the more it's disliked, the more you're likely to find your opportunity. Now, you might find out in looking at it that it's disliked for a good reason, but you want to start off where you're likely to have an advantage over the market, and that's why you have to scurry around. And one of the things I say, I kind of work in the garbage dump, and you reach into the garbage dump and you grab this thing, and you say, "Oh my God, look, it's a diamond, but it's covered with garbage, and we just got to clean the garbage off, and everyone will realize that it's a diamond." And that's what you want to find. You want to find a diamond that everyone thinks is a piece of junk. And it takes some work, but with time you recognize the signs of what's cheap and what's not cheap.
I think that's great advice. Do your own homework, have the courage of your convictions, and then go out and steal value. I think that's great advice, Eric. And I think this has been a great call. I'm sure everyone listening has enjoyed it. And so I want to stop here and thank you for your time and for all that you do for everyone in the precious metal sector.
Well, I got to say, Craig, those are tough questions, some of them, particularly the question on confiscation and things like that. So, the future's not certain, but you have to learn to do your best to try to figure out where it's all going and how you're going to prosper in it. And I hope that I've helped in some ways of leading people in that direction. So thank you very much for the opportunity to answer these questions.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening. We'll talk to you again next month.